Once again, I'm Brian Wilson. Henry Howard is here joining us today. And we're going to kick off things with actually with Henry today, give him a chance to walk through kind of part of what he looks at when he's unpacking his trading day and how he approaches edge data and how he uses it. I've gained a lot of insight from him, so I hope you can as well. So Henry, go ahead and take it away, my friend.
Great. Thanks, Brian. It's great to be with you all. I'm on the call here from a little town called Hamilton, New York, which is central New York. My wife grew up here and we moved back here a while ago. If anybody's heard of Colgate University, that's we live right a few steps from Colgate, and it's a cute little town. So anyways, I'm excited to be here. I'm going to share, just to get started, I'm going to first share a couple questions, and then I'm going to take you through my personal process, my trading process, how I utilize Edge, and hopefully get a couple questions answered by the end of it and share some insight. So I'm going to go ahead and share my screen. My first couple questions for everyone is thinking about time frames and position sizing in the context of Edge. Is everyone able to see the couple of slides I got up here? Can you see that?
Yep, just came up.
Okay, great. So my process, I'm on the East Coast, and I always think I tend to think of the market in terms of time frames, whether it's a day or 2 days and what time you're getting to the market. So my curiosity for the group is thinking about what is your personal time frame, and then what is your position sizing, and on days like today, what's your confidence level in that position size and that hold time? So for me personally, I tend to be a day trader. I have time frames that tend to be less than half a day. When I started trading about 3.5 years ago, and started on little 1-minute candles and have since graduated. But I want you to know that my context for this may be different than yours, that I tend to be working a little more active in trading. And so tend to be what I think is relatively larger position sizes, depending on your account. And so I just want to give you that context up front, because I've been to a lot of these workshops where, people have different time frames. So I just want to give some context to my process. So if you see my slides, I'll just go quickly. Every day I just open up Edge around 6:30 Eastern time, and I run through what's going on that day. So the first thing I do is check the data of Edge, and then the second thing I do is just double check the context. What sort of expiration, especially right now, I don't want to get caught off guard with a big expiration like today. And just thinking about what tends to happen. So let me pull up right now the Edge dashboard. Can you all see the Edge dashboard?
Yep, we sure can.
Okay, so I use Edge mostly on mobile, but what I'll do is I'll pull up, there's two things that I'm going to look at. I'm going to look at broad sentiment first, and then I'm going to peek at the number of components in momentum. And I've been expecting momentum to be right where it is. I keep wondering if this upward move in SPY is going to hold. Normally, we would expect to see more components. I think Tim mentioned that this morning in momentum. So I'll look at momentum. I'll see low volatility, and then I'll just check broad market sentiment. I have an idea just because of what happened yesterday and what happened last week of where broad sentiment is. But I also want to find out if we've really made that significant turn in broad sentiment. Obviously, since last Friday and since Monday, we've been really reaching this green line and saying, okay, I know that when we reach this green line, and if we go past it and we have short covering going on, there's a likelihood that we're going to see a bump in prices. Now, so there's two things. Either I'm looking to get long, or I'm disciplining myself not to try and get into a short really late. And so those are the two things I'm looking for on a day like today. And really, like this last week, I said, be really disciplined not to try to get short on a leg that's not going to happen, because we've already bottomed last Friday at the end of the week, at the end of the day. So that's broad sentiment. Again, stop me if you have any questions. Again, I mentioned momentum. I'll double check. I'll look at low volatility, and then I have a mega cap portfolio, but really I don't look at that. What I go to is big tech, and so we have 11 components in big tech. I have another big tech that includes Berkshire, but I actually like the big tech portfolio more. So what I've been watching recently isn't necessarily the levels on the portfolio. Obviously, the sentiment is bottoming. Obviously, we've been having coverage, but what I'm looking at is these supply levels. If you see me highlight those supply levels, Google 32, Shopify is a bit smaller. So I put less weight on that. Tesla, Meta, Apple. I'm looking at what is the overall short volume of these, and if we've been making a turn, what's the likelihood of us getting some upward momentum? Well, these supply volumes are at, on average 45%. And even what we know is that they've been falling for the last 4 days. So we know that there's been coverage in the market. We know that's a lot of the price move. What I want to bring your attention to now, and what I want to spend some time on and maybe offer up some questions, is behavior. So there's two ways I'll sort my big tech. I'll sort it by market cap. So obviously Apple, Microsoft, Google, the market's going to tend to pile in on those names. And what I see over here is a mixture between passive trading. We see a little bit of active, we see a little bit of fast trading happening, but not necessarily dominated by fast trading. Right now, we have these mixed behaviors, and we know that a significant portion of the market and dependent on passive money. So I'll stop for 2 seconds and see if there's any questions. But really, I'm focused on what's happening in this behavior column to decide how consistent these prices are going to be, if there's going to be follow through. And I'm really looking for a movement from either a really mixed bundle to active trading, or a mixed bundle to dominated by fast trading. So those are sort of similar to how we have our red line and our green line. I'm looking at a dominating behavior and how that's manipulating, in the context of relatively lower supplies, demand that seems to be bottoming, but also what we know is we've had, almost a 4% move in 4 days, which is a significant move. So that's all the data and all the time that I'll spend on sentiment, on short volumes, and then behavior. The next thing that I wanted to look at was checking on the context. So obviously today is Apple earnings after the close. So I don't like to trade these days, even though historically they're great days to get long. Last week we had I think it was Microsoft and Amazon. I'm highlighting earnings here because I can't tell you how many times that I was expectant of the market to make a turn. And what I believe happens is on these days where Apple has earnings, or these big tech names have earnings, it's a really good time if you know that passive money's flowing in on a new month and there's a lot of buzz about these earnings, that's a good time for market makers to increase the price of their stocks, right? So the concept is when we have these larger names, that they tend to grind out on their earnings day up through earnings. And then, I don't hold through an earnings announcement at all. Just because, I've learned from bad experiences. And then the last thing, as far as context, is looking at data dumps. Look, that for me, I always watch sort of the 8:30 data dumps, and a lot of the time, it does what's expected, or it just reaches toward a median. But I'll really think about what was the move in that data dump. How is that driving market behavior? How is that driving prices? And what's happening in context. Say that data dump is, we're up 1%, but I know that short volumes have topped. I know that sentiment is at 7.5, and there's a high likelihood that that move is not going to last. And we also have fast trading behavior. So all of those things give me a high level of confidence to either go short the market, or contrary, if I know we have short volumes in our short volumes are low in big tech. I know that we're at 3.4 on sentiment, and statistically 100% of the time we rise from these levels. I'm going to decide if there's a data dump that sells off, that's a place where I can get in the market. Whether it's in a big tech name or if it's in one of our momentum names, I'm looking at that volatility. So those are the two things. I'm not going to take too much more time. I'm going to leave some time for Brian.
Henry?
Yes, please.
What will you define data dump?
So I use something called Forex Factory. Can you see this?
Yes.
Yep.
So when I say data dump, what I'm referring to is you tend to be, it's an 8:30 Eastern announcement, CPI. A lot of them come on Fridays. So like, to me, these non-farm payroll, these sort of things are data dumps, and we tend to see it in the futures market. And I would say it's 50% of the time it ends up at the price that it started, and I'd say the other 50% of the time it reinforces a move. It actually sets a direction for the market. I'd say 25% of the time sets a direction, and then another quarter of the time it's an opportunity for market makers to push the move higher and then start a reversal. And again, that's dependent on the leading behavior of the day. So that's what I mean by data dumps is, each day I look about a week out. I would say, FOMC is similar to a data dump, but even more important, earnings, is similar. Like, it's just these pitfalls that I think I've made bad decisions because I wasn't aware of what was happening that day. So I try to understand the context of the market, in addition to something like expirations or like the Wednesday VIX expirations. That's an additional element. Steve, did you get your question answered?
I did. Thanks.
Okay.
Henry, quick question for you. You had talked about your looking at the big tech portfolio and looking at it from a behavioral standpoint. Do you see any behaviors as you're watching it that tend to have, let's call it, better stickiness or continuity? Let's say if the market's moving one direction or another, is there more predictive value with some behaviors rather than others?
Yeah, I mean, I don't trust. So to be clear, a dominant behavior to me, and I just made that term up, is out of 11 names, I need to see at least 8 of these names matching, and I need to see an alignment in demand. So a behavior that I think is non-sticky is if 8 out of, I would prefer to see 9 or 10 out of these names with a fast trading behavior. And I would say that is not a sticky price. Sometimes these demand numbers are really, like you'll see Tesla and Meta are way up, and Amazon and Apple are at a 5. And so they're kind of a push and pull where the market's trying to find, some pricing intermixed in them all. What we see here is they're pretty well, outside of Microsoft, they're pretty well aligned at a bottom. I'm not, I take Netflix and Shop. I kind of ignore those two because they're smaller. So my point though is, if we get this really strong up move, like I'll go to a question that I had yesterday. The biggest because we were talking about how do we get such a big move with oversold conditions, and I said, check on leading behaviors tomorrow. That will be an indication if prices will keep these levels. This is my little guy, and this was on a chat yesterday. Well, the behaviors this morning told me that we probably these prices will probably continue forward, and because the Apple's earnings, what tends to happen is we get money flowing, and then the other context is that it's new month, new money. So all the people who are contributing to a 401k, who are contributing to these monies are going into these passive funds. So we know that there's money that's going to be buying the indexes, and in turn, we're going to get names that get carried along with that. So I want to give you that was today. Can I give you real quick, Brian, the opposite of what I would call like a mixed day?
Absolutely.
So this is from 10/12. So this is the data from 10/11. So you see the date there, 10/11, and we have a sentiment of 7.5. And here we have short volumes that are relatively low, but I know sentiment, this is a very overbought level historically. But what I'm looking for is the day that the market turns. So I'm totally picking a top. I don't necessarily love that strategy the most. I'll be much more careful picking a top than I am just riding a momentum market. The kicker for me on that same date is I go and I look at behavior. Can everybody see that okay?
Mm-hmm.
What do you see in behavior on 10/12?
Whole lot of fast trading.
Whole lot of fast trading. And so here's the price action. It's only a point, it's only a percentage and a half, right? But to me, that's a great day. And again, I'm mentioning pre-market, the opportunity to get in pre-market if you have those, if you have the tools you need to get in pre-market. So that would just an example of, we know that there's been coverage. We know that we're overbought on demand. We know that we're being dominated by fast trading. And so that's an opportunity to get, those are indicators to me that the probability that we have a little bit of a sell-off, that there's a good probability that there could be a sell-off. So this was today, obviously. I'll wrap up with this. So I mentioned at the beginning of this, expected volatility, and then saying, does my decision align with the inputs for the day? Today, I said thesis, grind up, Apple earnings push into an after hours / Friday sell-off. Look for Friday fast trade to confirm. Short position is contrary to sentiment and short volume, so I won't die on this hill. I can be, right now we don't have a lot of short volume. We are looking to get long here. But I feel like a 4% move in a few days is pretty significant considering, the overall landscape. But anyways, I'll stop talking. I appreciate your time. Thanks for listening to the young guy. And if anybody has questions, feel free to call me and I'll hand it back to Brian.
Yeah, Henry, one question here from Bob coming in. Does heavy fast trading behavior usually equate to down days? I would say that usually equates to momentum either way, but what do you say?
It has to be coupled with a sentiment top. That's really where I'm looking. Like if you're taking more, if you're swing trading and having these, and you're really looking for where can I confidently reposition my portfolio, or what's the probability that there's some profit taking within the month or 2 month, that's more of the time frame I'm looking for those fast trading. The contrary is a dominating effect by active traders, even though it's a small portion of liquidity and it's a small portion of the market. Similarly, I'd look for this if we're in a drawdown over a week or so, or maybe a 2-week sell off, I'm looking for active money. I'm looking for a shift from really mixed to actually what I'll see is active buyers, value traders coming into the market and sort of setting a floor. That I look for that as a behavioral indication that we might be finding a bottom. It's simply to reinforce broad sentiment and short volumes. That's how I use the behaviors. A lot of times they're mixed, and then I will lean on the behaviors less.
Good stuff. Thanks so much, Henry.
Yeah.
I will mention to everyone that Henry and I are available, to get together with you guys as you have time. Just shoot us an email. We're happy to get together in that manner. We had a meeting with Chris not too long ago. John, you and I were able to get together last Friday. So we're happy to answer questions via email. We're happy to get together and chat with you guys. As you can tell, Henry has a vast breadth of information, and he certainly adds an incredible amount to the team. So thank you for jumping on today, Henry. I really appreciate it. I did want to take a second here, and Henry had mentioned this earlier, and he had actually, talked about it with one of the clients. What was happening with this turn that we saw, this recent turn? Could Edge have been more predictive of this turn? Here's the upside right here for the SPY. Tremendous upside, not even counting today's activity. And this was an interesting point. John Cook and I got together, and I believe it was right here on the 27th. So we got together last Friday, and we were looking at the market. And at that point in time, sentiment had been dropping, and short volumes were at their peak. And I remember the discussion clearly because John and I were talking about the fact that sometimes when the market looks its worst, that's when you can have a little bit of a turnaround. Sure enough, we did. The market moves below the green line. For those who are new to market structure Edge, think of the green line as oversold. Think of the red line as overbought. This particular move from oversold conditions, let's call it a little bit rare. We don't tend to see this violent of an upside when the market becomes oversold. I think there's two factors that have played into this move. One is the fact that we were at the end of the month, and let me show you what. Let me pull up the S&P 500 here for a moment. We had some pretty significant declines going into month end. So here's a 3-month chart, but if you look at trading for October, here's the declines really from before options expirations coming into the month end time frame. That's very, very steep declines. What ended up happening at month end, and I think I mentioned this in the Monday note, that there was the possibility of upside either that Monday or both days. Well, we did end up having upside on both days. Was the structure great going into that upside? No, it wasn't. We had a ton of names in my experimental short portfolio. We had few names in our momentum portfolio. Part of the reason that you can have few names in momentum in an environment like this, momentum portfolio is tracking stocks that are 8 or greater from a sentiment perspective. When the market's under heavy pressure, guess what? There's not going to be very many stocks that are 8 or greater in that market environment. What did we have the last couple of days? Well, we had passive money that was underweight equities coming in at month end. They're trying to track to averages, and they pull the market back towards the averages. Now, if we kind of pull out our perspective a little bit, we'll pull this out to a year-to-date look. You can see, this is more of a momentum market here. You can see this market right here. Obviously, that there's not much momentum in that market. Just visually, you can see that. But once again, keep in mind that portfolio is tracking elements that this is one of the listings, but it's tracking elements that have sentiment 8 or greater. That type of move is not going to bring many stocks into that type of portfolio. You can see right here as well. There's that move down in terms of short volumes. That's a pretty violent move lower, supporting the advances that we've had here during the last few days. Think of it as a month-end true-up rally coupled with really good short covering. So I did want to cover that point, that question of, why did we get the gains when sentiment was dropping? Part of it, once again, due to the fact that sentiment did get oversold. We were at month end and we had short covering at the same time. I had mentioned a trade to you guys, or something that I was watching. I'll go ahead and show you a little bit of the data that I've started tracking. What I'm tracking here is SPY. So, and let me go ahead and pull this up and show you what it looks like. Recognize that it's an ETF. By default, then it's going to be very derivatives driven, and it's also going to be very much an arbitrage vehicle. But what I'm starting to track, and we had a question on this during the last meeting last Thursday, and I unpacked a little bit more of the data. I'll share that with you in a moment. But part of the thesis that I've been watching, and this is very new, so please don't take this as science, but what I'm tracking is when short volumes in the SPY get really high, you can see it right through here. The 200-day average for the SPY is about 56%. And you can see that line here. This is a 3-month line. But when short volumes get really high, look at the time frame here, what happens to the market. Market's trending sideways, starting to trend a little bit lower. Look at what happens when we get short covering in the market. The market goes in a little bit of a rally mode. Look at what happened recently. We had short covering as well that went below that dotted line, and we started to rally as well. So once again, don't take this as an exact science. It's just something that I'm starting to track. But what I did is I dumped some data here, actually over the last 5 to 6 years. And looking at the data, if this was a 5 or 6 year chart, I took periods similar to this, when we really moved away from the, let's call it standard deviation, either lower or higher, and then either went into long trades or short trades. Over a 1-year time frame, there were 10 periods where we were making money on that trade, 3 periods where we were not. So once again, inexact science, but right now I'm starting to track this data a little bit more. I've actually incorporated it into my daily look. I spend about 30 minutes each morning dumping different types of data, looking at it. It's actually one of the more enjoyable parts of my day. But I'm tracking sentiment, short volumes, tracking performance as well. And this is fascinating. If you look at this, this is going back to the early part of October when I started to do this exercise. Look at SPY when it was much below the average. Keep in mind that that average is about 56%. Look at the gains that the market was posting. Note what happens when SPY really gets in front of its skis a little bit. Look at the daily performance in the market. It really starts to lag. And then I mentioned that we recently had short covering. Look at the SPY going from 60 down to 54 in a 1-day time frame. That was actually, I was looking at this data Monday morning, wondering what was going to happen. There's what happens. Market starts to advance. Now, obviously, there were other things going on. We were getting short covering in the underlying stocks as well, but it might be a tool in our tool belt, right? It's not, an all-encompassing tool, but I'm starting to incorporate it as a tool in the tool belt. Just something to think about. If I get more definitive answers, in regards to this, I'll certainly, pass this information along. I will share one other aspect, and I wrote about this Monday morning. This was Monday morning's data. This is about 3,100 stocks that we're tracking, looking at stocks that have bottomed, pointing down, topped, or pointing higher. You can see that we had a change right there on Monday morning. Now, they're not yet pointing higher. It takes a little bit of time in the market for that to occur. But you can see that over the last couple of days, the data is changing. Probably wouldn't surprise me tomorrow that the percentage of stocks pointing higher will kind of take the lead. So I believe that's the major things that I wanted to cover today. Any questions that we can address for you guys today if we missed anything? I'll stop sharing my screen here for a second. Henry brought up an interesting point, and if you don't feel comfortable talking about it online, we'd love to hear about it via email or what have you. A couple questions to consider. Holding periods. What do you guys typically do? Henry mentioned that he's more of a day trader. I tend to be more of a 2, 3, 4 days at a time, tends to be my holding period. I will day trade depending on the circumstances. I actually have a short out there right now on a limit. Why did I put a short on today? Because the S&P 500 moved greater than its intraday volatility. I'm tracking to see whether the S&P will give some of that back by the end of the day. So we are curious about your holding periods, size and trades. Are you guys more comfortable holding greater size positions if they're shorter in duration? Do you have anything going on there? What do you like to trade? Equities, options, futures? I primarily trade equities and ETFs. I know Barry, you love to trade options. Chris loves to trade options. So, we do run the gamut in terms of that activity. All right, so I think we've covered everything in the chat room. Does anyone want to add anything? Thank you, Pamela. I appreciate that. Anything want to add anything to the discussions, things that are working for you right now, anything that you're watching as we move forward here in early November? We have bored everyone and put them to sleep. We did our job. Well, guys, it's been, I think that's a wrap for us today. Thank you for your attention. We hope that you learned a little something new with Henry's perspective. As I mentioned, we're happy to get together at any point. We want you to succeed. We don't pretend that we have all the answers. We're learning along with you. But as I mentioned, we want you to succeed. So if we can help you, please send us an email, or we can get together in individual sessions with you. Happy to do that. With that, we'll bid you guys a fond adieu. Hope you have a great rest of the day.